Taxes in the United States can be incredibly confusing, especially for newcomers. But understanding the basics isn't just about following the law, it's about legally paying as little as possible. Many immigrants overpay because they don't know about the deductions and credits available to them. In this video, I will demystify the US tax system and show you how to keep more of your hard-earned money. First, you need to determine your tax status. This is different from your immigration status. You are generally considered a resident alien for tax purposes if you meet the green card test, you have a green card, or the substantial presence test. The substantial presence test means you were physically present in the US for at least 31 days during the current year and 183 days during the 3-year period that includes the current year and the 2 years immediately before. If you meet either test, you are taxed on your worldwide income, just like a US citizen. If you don't, you're a non-resident alien, and are only taxed on your US-sourced income. It's crucial to get this right. When you file your taxes, you can reduce your taxable income by taking either the standard deduction or by itemizing deductions. The standard deduction is a fixed dollar amount that you can subtract from your income, $14,600 for a single person in 2024. Most people take the standard deduction because it's easy. However, if your specific deductible expenses are more than the standard amount, you should itemize. What can you deduct? Things like state and local taxes, up to $10,000, mortgage interest, and significant medical expenses. As a newcomer, you likely won't have enough to itemize at first, but it's good to know the option exists as your financial life becomes more complex. A deduction reduces your taxable income, but a tax credit directly reduces your tax bill, dollar for dollar. This is where you can find major savings. Important credits for immigrants include the child tax credit, which can give you up to $2,000 per qualifying child. There are also education credits like the American Opportunity Tax Credit if you or your kids are in college. Make sure you or your tax preparer explore every possible credit you might be eligible for. If you are not eligible for a Social Security number, SSN, you can and should file your taxes using an ITIN, or Individual Taxpayer Identification Number. Having an ITIN allows you to file taxes, which creates a record of your financial responsibility in the US, and it's necessary to claim certain tax benefits. You apply for an ITIN using Form W-7 when you file your federal income tax return. To summarize, determine your tax residency status, understand the difference between standard and itemized deductions, and hunt for every tax credit you qualify for. Don't be afraid to file with an ITIN. The US tax system is complex, so for your first few years, I strongly recommend using tax software like TurboTax or H&AMP, RBlock, or hiring a qualified tax professional. It's an investment that can save you thousands. If you learned something new, please hit the like button, and subscribe for more finance guides. Comment below with any tax questions you have.